Adjusted gross income and paying for college. What do they have to do with each other? The short answer is a lot. So with FAFSA, the free application for federal student aid, this is a critical tool in determining your student's financial aid eligibility. One of the key factors in figuring out the resulting number using FAFSA, that is called a Student Aid Index, SAI, is your AGI, adjusted gross income. Lots of acronyms here. Try to stick with me. So the higher the AGI, the less money we get in theory. The lower the AGI, the more money we can get. So understanding this and how we can impact AGI and financial aid can really make an impact on what you and your student end up paying for a college degree. So in this video, I'm going to explain more about how AGI impacts your student's financial aid eligibility, what goes into it, and how we could possibly help ourselves out here. Now make sure you hit subscribe because as you can see, there are lots of strategies when it comes to reducing the cost of college and helping your family work towards that debt-free degree. Hey there, my name is Jocelyn Pearson, founder of the Scholarship System and Debt-Free Degree Lab, our two programs to help families build strong financial futures rather than ones where they're just buried in debt. Now, this is focused on U.S. citizens and permanent residents, not international students. So first and foremost, what is adjusted gross income, AGI? This is an annual number that is calculated, and it is your gross income for the year minus specific deductions. It includes wages, dividends, capital gains, business income, and any other kind of earnings. But deductions that affect AGI might include things like contributions to retirement accounts, student loan interest, tuition and fees that were paid, among others. So why does AGI matter when it comes to FAFSA and financial aid for college? So FAFSA uses the family's AGI, adjusted gross income, to calculate the SAI, Student Aid Index, that I mentioned earlier. The SAI is used to determine a student's eligibility for financial aid, and it can result in different offers from different universities. But ultimately, that SAI number is just the golden rule when it comes to deciding if your student is eligible or not. I have a recent video all about SAI, how it's calculated, where you can find an estimate. So you can click on that here, or you can find the link in the description. Every free tool that I'm going to mention will be linked in the description. So therefore, a lower AGI, so a lower income, can result in a lower SAI, or Student Aid Index, and therefore a lower SAI can lead to an higher financial aid offer. So this is where it can increase the chances of receiving federal grants that don't have to be paid back, scholarships that don't have to be paid back, but also get access to debt money that is more favorable for students versus having to find it in the private world. So here's how AGI affects SAI, which affects financial aid. First, it affects the eligibility for need-based aid. So this is specifically referring to federal grants, such as the Pell Grant, and also subsidized student loans, which is where the interest is covered while a student is in college and doesn't start accumulating until they graduate. The only time that we can get this is by getting federal student loans, which is given through FAFSA, which is based on need, which is based on SAI, which is based on AGI. Hopefully you're following me here. Also state and institutional aid. So there are state grants, but also colleges use FAFSA to decide on their own merit money and financial need money. So it's not just federal money that FAFSA is used to determine if your student will receive it or not. Third are scholarships. So even private scholarships, sometimes organizations will ask for a FAFSA number, the SAI, in order to determine a student's eligibility. They might not entirely base a decision off of it, but it could be a factor. Now, that said, there are plenty that don't even ask for this figure. So if yours is really high and makes it look like your family has all this money, even if you don't, then don't worry about it. There are tons of scholarships out there that don't even ask for it. But that said, no matter what boat you're in, a high SAI or a low, no matter which bucket your family falls into, whether it's a high SAI or a low SAI, your family needs to be focusing on scholarships as early as junior year in high school all the way through college. So if you're not sure where to begin on that, or you just want to know, are we doing the right thing? I have a free webinar. It's about an hour long where I cover my 6 steps to securing 6 figures in scholarships. You can find that at thescholarshipsystem.com/free webinar, or you can click this video here to register for that. Also, I will link to it in the description below. Okay, let's talk about strategies to reduce AGI, which will reduce SAI for FAFSA. Now, always seek professional advice from an actual tax professional, a CPA. This is not official tax advice whatsoever. I just want to put that disclaimer out there, but these are suggestions that you can talk to your professional about. First is planning ahead. So FAFSA actually uses prior tax year information. So this means that your student's sophomore year in high school is actually already impacting what you're going to pay for college. And every year thereafter until prior year to them graduating, or prior year to your last student graduating, I should say. So that said, actually, this is where Debt Free Degree Lab comes in, which is our second program that goes along with the scholarship system, because some of these strategies we should be doing sophomore year in high school, and they are beyond scholarships, of course. If you want to learn more about that, you can go to thescholarshipsystem.com/join-the-lab. But either way, planning ahead gives you more opportunity and more time to implement some of these strategies because of that prior tax year usage. Second is maximizing retirement accounts. So like we talked about earlier, retirement accounts are reduced, or contributions to them are reduced from the income, so that lowers AGI. These are contributions to 401ks or IRAs. So if possible, if we have some extra funds, we could maximize these. And the other thing is we want to do it before the year ends. That's going to be used. Third is HSAs, or health savings accounts contributions. These are also tax deductible and can reduce AGI. So if your family has a high deductible health plan, then this could be a beneficial strategy. Fourth is tax deferred investments. These are traditional IRAs or certain annuities. They can actually be used to lower AGI. Earnings on this are not taxed until withdrawn, so they won't count, they won't hurt you, and if they are gaining value. Fifth is charitable donations. This can also reduce AGI with proper tax deductions, but you want to make sure you also have proper documentation. Business expenses, so if you are self-employed, if you have an LLC or an S-Corp or any kind of pass-through entity, then you can think of expenses that your business truly needs and perhaps purchase them in a year that you know is going to be used to calculate FAFSA's SAI. So ultimately, increasing business expenses reduces your income, which reduces the AGI. Next is education expenses. So taking advantage of deductions for tuition and fees or student loan interest if applicable. And lastly is tax loss harvesting. This is offsetting capital gains with capital losses in investment portfolios. So this is where things can get really complicated and you want to talk to your CPA, but you can at least ask about this. Now, the other thing with reducing AGI is timing of things. So there are three things that we can think about timing with. One would be to delay bonuses or income, or try to get them early if we know that it's before the year that'll be used for FAFSA purposes. But even delaying the payout of those until after FAFSA's filed, until after those dates, could at least prolong it by a year for the following year if your student's still in college. Next is prepaying any kind of expenses that can reduce our assets in cash. So if we know we're going to put a big chunk of change towards something, we could maybe time that a little bit better to where it is done right before we submit FAFSA, so that our assets are correctly showing that lower value rather than a higher value that's going to disappear really soon. So maybe you're just doing that right before you submit FAFSA instead of waiting until after. This could also be just paying ahead on deductible expenses. And the third is strategic use of funds. So assets are used in SAI, Student Aid Index. So again, going to strategies where we can reduce those assets or even show them as a parent's asset versus a student's asset. These are things that can reduce that SAI number. So comment below, has your family done anything that you think may have helped during the FAFSA season? Is there any strategy that I did not mention here? And if so, share it below. I'd love to share the wealth of knowledge with other families, and maybe we can all kind of brainstorm a little bit and help each other out. And remember, no matter what the result is, every family should be doing scholarships. That is if we have financial need or if we don't. So make sure you check out that free webinar that I have, thescholarshipsystem.com/free webinar, or you can click on this video and it'll take you there. So that said, understanding adjusted gross income, how it affects FAFSA, which affects SAI, which affects financial aid, is extremely important. In fact, in Debt Free Degree Lab, we actually brought in a CPA and created a whole lesson around this because it really can make a difference. It also can make a difference with tax credits, but we'll save that for another video. So if you have questions, comment below, let us know what questions you have, but hopefully this gave you some ideas that you can possibly use in order to affect the results from FAFSA and hopefully increase your students' financial aid package. Now, don't forget to hit subscribe because this is just one of many strategies we have for your family in cutting the cost of college. I'll see you in the next video.